In case you haven't noticed as of yet, across my YouTube channel, I often talk about different dividend paying stocks and ETFs that pay dividends on a monthly frequency. Now, the reality is whether or not a stock or ETF pays a dividend every single month or every single 3 months arguably doesn't make all that much of a difference, and as you can see throughout my long-term portfolio, I do own several different stocks and ETFs that pay both. But in this specific video, we're going to go through 3 reasons on why I think that monthly paying dividend stocks could be much more favorable to certain dividend growth investors compared to dividend stocks and ETFs that pay quarterly. So if you're ready to dig into this with me, make sure to drop a like down below, stick around, and let's get right into the first reason. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before we go through these 3 specific reasons, like I said a second ago, it doesn't really matter if a stock or ETF necessarily pays a dividend monthly or quarterly, because at the end of the day, if a stock pays you 15 cents every single month and a different stock pays you 45 cents every quarter, well, it's basically more or less the same amount of money. But there are still some specific reasons on why I think monthly paying dividends could be better. Now, the first reason on why I think monthly paying dividend stocks, or ETFs for that matter, could be better than quarterly is this right here: the fact that faster cash flow could offer faster purchasing power within your portfolio. Now, what I mean by this specifically, let's take a look inside my actual dividend growth portfolio. We have right here, for example, 1,000 shares of Apple, which of course Apple pays a dividend on a quarterly basis. Then just below Apple, we have 2,734 shares of the QYLD ETF, which pays on a monthly basis. Now, if you're a dividend growth investor like myself that's looking to receive as much dividends as quickly as possible to then of course redeploy into more shares of different dividend paying stocks and ETFs to really get the compounding snowball effect happening within your portfolio. If we're just for a second only looking at that aspect, which of these 2 assets are going to get cash faster in your portfolio on a yearly basis? Well, it's going to be the monthly payer QYLD. Now, of course, I'm not saying that the QYLD ETF is a better investment than Apple stock, but I am just making the point that on a cash flow basis, getting more cash into your portfolio ASAP. So as a dividend investor, you can get that money invested much quicker into more different dividend paying stocks and ETFs. Well, in this case, the monthly payer would win. The next reason on why I think monthly paying dividend stocks could be favorable for some dividend growth investors, and especially speaking for myself, is the psychology involved in it. Now, when it comes to long-term investing, especially building out a long-term dividend growth portfolio like I have right here, I truly do believe that strategy and psychology play a bigger role in your overall investing career than a lot of people like to give credit to. Now, for example, that's why I always tell newer investors to track your dividend income in a dividend tracker like this one, or of course you can build your own. It could be whatever. But the psychology behind getting dividends on a monthly basis and or tracking your dividend income on top of that is going to give you as an investor a lot more motivation behind putting more of your hard-earned active income into investments. Now, at least for me personally, if I buy a share of Realty Income, I know that next month I'm going to be receiving another 26 cents more or less in dividends. Where on the other hand, if I of course buy a share of Apple, and let's say the ex-dividend date just passed, I'm not going to receive a single dividend from Apple for about 90 days. Now again, not trying to compare Realty Income to Apple, those are 2 very different investments, and side note, I honestly love both of them. But I do think that the psychology behind a monthly paid dividend stock or ETF, knowing that if you invest in said stock or ETF that pays monthly, you know that within more or less the next 30 days, you most likely are going to get paid out from that asset. And especially during my early days of investing, this was super motivating, because I realized that if I could take some of my hard-earned money, let's say it's $100 or $200, and buy, for example, a few shares of Realty Income, I could literally see cash flow, even if it's just 50 cents or so, 75 cents, I can literally see cash flow entering into my portfolio within the next month or so, which was very motivating, especially for more dividend income focused investors like myself. Now, it goes without saying that if you're more of a growth investor, this is not necessarily going to help your psychology, because you don't really care necessarily about getting 26 cents, 50 cents. And honestly, a lot of things I'm talking about in this video might not necessarily make sense to you. But for those dividend growth investors like myself that like to look at every single penny, entering and of course exiting their portfolio, the psychology and mindset that go along with the monthly paid dividend stocks or ETFs could definitely be beneficial, especially if you are really hands-on in your portfolio like I am. Now, the last and final reason I think that monthly paying dividend stocks and ETFs could possibly be favorable compared to quarterly ones is the idea of living off your dividends completely. Now, I've showed you guys my long-term portfolio many times on this channel, and I even showed it to you just a second ago. Those are different dividend stocks and ETFs that pay me dividends every month and or every quarter. And in the future sometime, at some point after I stop reinvesting into more dividend paying stocks and ETFs, I'm going to be looking to use those dividends for some of the following things. I'm talking things like rent, groceries, maybe a mortgage payment, daily incidentals, things like clothing, things like travel, etc., etc., etc. This right here is just a small list of some typical monthly expenses for humans. Now, if we're trying to build out a long-term portfolio that pays dividends, of course, and we're looking to use those dividends to live off of in the future, I'm not saying that if a stock or ETF pay quarterly, that it's impossible to live off the dividends. Obviously, in my long-term portfolio, I have tons of holdings that pay quarterly, and obviously you just need to do some budgeting and make sure you have the cash on hand. It's not that big of a deal. But there still is an argument as far as cash flow goes, that if you are receiving at least a good amount of dividend income every single month, you're going to be able to take care of things like rent, like groceries, like other things on this list. Because let's be real here, rent is not paid quarterly, a mortgage payment is not paid quarterly, a credit card bill is not paid quarterly. And like I said, I fully understand you can just budget and keep the cash balance and wait till the bills come up if you are paid quarterly through dividends. But for someone like me that's a little bit OCD about budgeting, and for someone that likes to run things on a cash flow basis, owning assets that pay you monthly is possibly going to be a little more favorable when it comes time, hopefully sometime in the future, where we all can use our dividend income to pay for our bills. Now, if you're personally building out a dividend growth portfolio that you're planning on maybe selling off in the future to use that money to live off of, or maybe you're not even looking to use this portfolio to live off the dividends at all, well, then this of course doesn't really apply to you. But for those investors like myself that are truthfully trying to build out a portfolio to surpass their monthly expenses, and then sometime in the future look to use their portfolio's dividend income every single quarter, every single month to pay for their bills, I think dividend paying stocks and ETFs can come in extremely handy when it comes time for that. So there we have it, guys. Those are 3 different reasons on why I think potentially dividend paying stocks and ETFs that pay monthly as far as dividends go could be favorable to those that pay quarterly. Now, of course, I would never purchase a different stock or ETF solely because they pay a dividend monthly versus quarterly, but I do think that it's something important to think about, especially when building out your specific strategy when it comes to dividend growth investing. But now lastly, I want to hear from you guys down below. Do you agree with me that dividend paying stocks or ETFs that pay monthly could be favorable long-term to building out a portfolio, or do you think quarterly dividend paying stocks ETFs are just as good? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.